You'll be able to tell your kids where you were when the United States dollar changed forever. We just saw the last gasp of the United States dollar. In 20 years, we'll be able to look back on this post-Labor Day weekend and see the exact moment everything changed, right after the Jackson Hole meeting and right before the Fed slashes rates. It's historic, and not in a good way, that the U.S. economy right now is grinding to a halt.
I think the U.S. economy is slowing faster and in a broader sense than most people anticipated, including the Fed. And I think that the market is catching up to that possibility, which has become a probability.
Mohammed El-Arian is exactly right, and it's all being controlled by a globalist cabal of elites. Right now, as we speak, we are watching the single biggest shift for the U.S. dollar hegemony in 80 years. In just 8 days from now, on September 18th, the plan will be fully put into action. The Fed lowering interest rates, the massive dumping of U.S. dollars will flood the United States market, bank collapses, job losses, which we're seeing by the millions, by the way, thanks to the new jobs data we just got, and skyrocketing inflation that no amount of lying is going to hide. And I'm looking at you, Kamala Harris.
No.
Yeah, laugh all you want. Let's see if she'll be laughing tonight during the big debate with President Trump. So let's get into it. There are a few big pieces of news I want to get to right now that everyone better pay attention to, and most people ignored. Most of you were working hard last week trying to provide for your families, going about your day, when we learned that Americans are losing their full-time jobs by the millions. Yes, millions of Americans losing their full-time jobs, and they're being replaced by non-citizens. Yes, non-U.S. citizens. Yes, illegal immigrants make up the bulk of the new jobs that were added in the last 3 years.
Stocks slid Friday with all three major indexes down and the S&P posting its worst week of the year. It comes as the latest jobs report fell below expectations.
Just look at this data on your screen. It's astonishing. And by the way, this isn't xenophobic. It's the truth. Americans are being replaced. Meanwhile, as Fed Chief Jerome Powell prepares next week to slash interest rates, further devaluing the U.S. dollar, he dropped an economic bombshell up in Jackson Hole, Wyoming last week. Powell admitted that the jobs market is in real trouble. Consumer spending is down. And he openly admitted that the Fed is now pivoting. Quote, "The time for pivoting our policies is upon us," he said, end quote. Meaning an era of rate cuts is coming and a new era for the Fed. And with those words, he sent gold skyrocketing to an all-time high and the U.S. dollar plunging to its lowest point of 2024. And right now, as of this recording on this Tuesday, yes, the gold right now is trading near all-time highs. So with just one sentence, he hasn't even cut the rates yet. This was just one sentence, folks, and it sent the dollar plummeting. As trends forecaster Gerald Celente just told me, we are already in a recession, and the coming crash is going to be worse than anyone wants to admit.
They want to keep the people in power in power. Simple as that. They're running the show right in front of your eyes. They're going to lower interest rates and do everything they can to boost up the economy. The lower interest rates fall, the deeper the dollar declines. The dollar's only high because of the high interest rates. So again, the deeper the dollar falls, the higher gold prices go. Gold prices could go to $3,000 an ounce this year.
Yeah, a recession is here, and it's about to get much worse. New data last week from businesses all over the United States telling the Fed that Americans can't afford shit, thanks to Biden and Harris's economic policies. Quote, "Our data supports the thesis that consumer spending is paring back materially. We will start seeing significant negative impacts to our business if spending continues to decline at the current rate through the end of the year." In other words, Americans are tapped out. No savings left. No expendable income to go to the movies and to the mall. Instead of getting new clothes for back to school time last week, sorry kids, you have to wear last year's clothes. Don't believe me? Well, then look at the sales at the Dollar General and the Dollar Store. The freaking dollar stores are hurting right now. New data last week from Dollar General shows shares crashing 26%. Why? Well, the store admits that its core customer, its bread and butter, feel financially constrained. Financially constrained to go to the dollar store? And the store is desperate. Last weekend at the Dollar General, they rolled out a 91% clearance sale to try to lure customers into the stores. Even the 91% off, Americans still aren't shopping like they used to. So now the Fed is going to slash rates, likely 4 times in the next few weeks before the end of the year. 4 rate cuts. But it's too little too late. As Jeremy Siegel likes to say, the honeymoon is over for the Fed.
The honeymoon is over. Let's put it that way. Jay Powell and Fed enjoyed this idea that, we can bring inflation down, no real consequences. We can wait and wait and wait. Well, I think he waited too long.
There isn't some magic bullet that's going to put more money in people's wallets. Sure, reduce inflation would help out, but that's not going to happen. With Powell slashing interest rates, the U.S. dollar will be devalued even further. The market will be flooded with U.S. dollars. Just so you understand, right now, the United States, there are $6.2 trillion sitting in money market accounts. That's an all-time record. Normally, it's about $1 trillion. Because up until now, the U.S. dollar has been an attractive investment against the euro, against the yen, but not anymore. As soon as Powell slashes interest rates, that money will leave those money market accounts. In other words, that's literally selling U.S. dollars. And all of this cash is going to hit the American market, making inflation far worse. But don't worry, Kamala Harris has a plan to help. Even though she's currently responsible for the disaster, she's pretending like she's not even currently in power. No, that was Biden. I'm not really a part of that administration. Her plan is to print trillions more in U.S. dollars, put in place price controls, tax unrealized gains. And her top economic advisor appeared on CNBC, tried to explain how taxing money you don't have would work, and it didn't end well for him.
Unrealized gains, taxing unrealized gains just doesn't seem fair in any sense of the word. In the very best sense, if you are taxing unrealized gains, all you're doing is pulling forward the taxes that would be paid later when someone actually sells the stock.
I think that this reaction to unrealized gains is a little funny, given that I bet that the majority of people watching right now are already paying a tax on unrealized gains. It's called a property tax. When the value of your home goes up,
it's a use tax.
When the value of your home goes up, you pay higher taxes even if you don't sell your home.
Your value of your home never moves the way a stock moves, the way something else moves.
That's always the go-to answer.
I mean, can you believe that? These are the clowns trying to run America into the ground, folks. They are fools. But it doesn't stop there. New data out at the beginning of September shows just how many pieces of merchandise are not being shipped out of America, our trade deficit. As economist Peter Schiff points out, our record high July merchandise trade deficit reveals the true state of the U.S. economy. It's a complete disaster. If currency traders understood economics, the dollar would be crashing, he says. It eventually will, taking the U.S. standard of living down with it. In other words, imagine you have a lemonade stand, and you also like to buy snacks from your friends' stands. You know, if you buy $10 worth of snacks from them, but they only buy $6 worth of lemonade from you, you end up spending $4 more than you earned. That is like a $4 deficit. For the United States, it means the country is spending more money on products made in other countries, like cars, clothes, electronics, than it's making by selling American-made products to other countries. The merchandise trade deficit, just a fancy way of saying that the U.S. is buying way more stuff from other countries than it's selling to them. And folks, we're just 8 days away from the first Fed rate cut on September 18th. All the warning signs are here, folks, of a major U.S. dollar meltdown. And the mainstream media is going to try and hide it in order to get Kamala Harris elected. So we'll be watching the presidential debate tonight with popcorn to see what other disasters are looming for us. Big trouble, though, is coming for the United States dollar, and you better be prepared for it. Don't tell me that I didn't warn you.